Good morning, everybody, and happy Tuesday. In today's video, I'm going to go over an update on bond yields, gold prices, oil prices, and the odds of Federal Reserve rate cut. Before I get into all that, my name is Michelle St. Pierre. I'm a mortgage broker in Ontario. If you have any mortgage questions, just follow up with me directly. I'll gladly help you out. So we have a little bit of a downtick in yields yesterday after the uptick we had at the end of last week. Now, why was all this going on? Well, at the end of last week, we had oil spiking upwards because of some incursions from Russia into NATO territories, because Russia needs high oil prices because it is a big part of their economy. And now OPEC decided to slap those prices back down by announcing an increase in oil production, 500,000 barrels, per day. Now, this is actually very interesting because OPEC has been saying that they're going to be increasing production every time oil prices get too high. Every time oil prices get too low, something happens in the world to change those oil prices back up. So it seems like there's a lot of manipulation here in the oil markets. Also, OPEC has yet to actually deliver on their full commitment when it comes to increasing these production limits. They never actually hit them. So that's something that we'll be keeping an eye on, because maybe they can't hit those production limits, which could be a problem with oil demand that we have moving forward. Now, projections on oil still say it's going to be lower per barrel like it is right now, which is causing unemployment in Canada, as I've mentioned. As I said in the past, when oil gets too low, you will see unemployment in our oil sector because it's less profitable in Canada to have oil prices per barrel too low. Now, let's take a look at a couple of other things here. Namely, gold is going towards its meteoric highs for a lot of reasons. Less and less faith in the US currency and the US economy, but also a little bit more fear towards the potential of having an AI bubble right now. So many investors are securing their assets in commodities like gold. With the US economy being the way it is, there's still almost a 93% chance that the Fed will be cutting interest rates this month, but they're cutting interest rates into a higher inflationary environment. And also, as we mentioned, there's been a lot of pressure from the federal government onto the Federal Reserve, which could cause some issues, as in could influence them to make decisions that might not be the best for the market. So this is causing many individuals to leave US markets and start purchasing gold, and I'm assuming other assets as well that they can secure, like silver, copper, a lot of other things, hard assets opposed to dollar assets.